think we've moved, in the past, we've moved from this adversarial model where fintech was going to kill everything and the banks are dead, to a collaborative model. And that's really accelerated, I think, during 2017, that collaboration. And if you think about it, you take the disciplines, risk management, distribution and things of a bank, and you augment it with technology. And I think that's a model that for 2017 and 2018 will continue to proliferate. The fintech players will adapt their business models, and the banks will adapt their business models. And I think you'll start seeing, from a customer perspective, very different impacts out of that collaboration. Competence on one side is, for a tech company, is things like artificial intelligence and data analytics and blockchain and all these things. Those competencies usually don't exist within the primary institutions. The question is, how do you blend them in a very nice way? And I think we're at that point in the fintech revolution where that augmentation is the most likely outcome rather than replacement. I think this will be the year that InsurTech starts to rapidly rise and become as big or bigger than fintech. And I think that because the magnitude of opportunity and the magnitude of change are so great, that we'll see the same things we saw in the early days of fintech proliferating inside InsurTech. Very much a strong move towards artificial intelligence. This week it was announced a Japanese insurer had implemented an AI technology and was replacing 34 white-collar workers in Japan, which was, of course, a huge social issue in Japan. And again, I think that that's important to really think about the human element when we're looking at some of these technologies. So I think the rise of artificial intelligence in insurance this year is 2017 is the year it moves from sci-fi to a very robust reality, and you'll see that continuing to expand in 2018. Regulation's an interesting one. We're seeing regulators actually in some markets moving very much to the front of the pack. You've got the MAS in Singapore that's very forward-thinking on fintech, and perhaps I would critique maybe a little bit too far. But really trying to drive markets and change, and I think that's a very admirable quality from a regulator. I think the challenge in regulation is that technology is growing at proliferating at such a rate that it's very difficult for regulators to keep up with it. And if you look at artificial intelligence that can read 15 million pages in a few seconds, and you've got a regulator reading a page a second, then, or a page a minute, it's very hard to see how that reconciles. So I think you'll start seeing RegTech starting to take off because it has to. The regulator really needs to spend and invest a lot of time in understanding these technologies, understanding the impact, understanding both sides of that risk equation. And you're seeing different models evolving from a regulatory standpoint around the region. You've seen India push innovation to the center through the regulator. You've seen Singapore producing that hybrid model where the regulator is trying to drive the fintech and ecosystem, and they've moved to the front of that. In Hong Kong, you've seen very much that grassroots entrepreneurialism still, and a regulator still learning. Sandbox is the new term for learning. And then in countries like China, you've seen the opposite end, where it's really been driven from market forces, where the regulators observed and then acted and brought fintech into the major mainstream. So I think these different models of regulation are quite interesting, and there's no winner in terms of that, but there is a clear loser, which is to sit and do nothing. I think there's a different lens to look at that. If you look in, I think it was 1908 when Henry Ford said, you can have it in any color as long as it's black, right? Really the focus was industrial productivity. How do I become the most efficient player in the market? I think we're seeing something very different today, and I think artificial intelligence will take that to a whole new level. And that's really the main game today is customer productivity. You'll go to a bank where you can get an account open in 3 minutes rather than 6 weeks, right? So that effort shift now, we used to say in banking, we'd pass you a form and we'd say, I've known you for 20 years, but please, can you write your name, and we would say, because you had to do business with us. That's no longer the case today because of fintech and health tech and InsurTech. So now customer productivity has moved to the front. And with artificial intelligence, it's not just productivity, but it's also quality, it's information. there are AI tools that will help consumers make far better decisions than much of the advice that they get in market. So I think there's a very interesting dynamic changing. So I'm less about industrial productivity and more about customer productivity, because that drives growth and sales and revenue. What industrial productivity does is drive your cost base, which is, it's not a strategic advantage in the long term.